Welcome to the deep dive. Today we're jumping into the world of Hedera Hashgraph, or HBAR. It's this digital asset built specifically for, serious enterprise use.
Right.
But that raises this big question, the one we've seen buzzing around online. Can a crypto designed for big business adoption actually see its price shoot up? Or is the whole point to keep it stable, maybe even low?
Yeah, that's exactly the puzzle we're tackling. We've got a stack of sources here, everything from Reddit threads to some pretty dense financial analysis. And our mission is to sift through it all.
Okay.
We want to cut through the noise, basically, and give you a really clear picture of HBAR, its potential, the challenges, the tech, market feelings, even some completely conflicting price predictions. Just lay it all out.
All right, let's do it. So to get everyone on the same page, what is Hedera Hashgraph fundamentally? What makes it different from, say, Bitcoin or Ethereum?
Well, the first thing is it's technically not a blockchain. It's a public ledger, yes, decentralized proof of stake, open source, but it uses a different system called the Hashgraph consensus algorithm.
Hashgraph, okay.
And beyond the tech, its governance is really unique too. It's overseen by this council of major global companies and institutions. We're talking Google, IBM, Boeing, Deutsche Telekom, LSE.
Wow, so big names involved right from the start.
Exactly. It's got serious institutional credibility baked in.
And the token itself, HBAR, where does that fit in?
It's got two key jobs. First, it's the fuel. If you want to use Hedera services, smart contracts, file storage, simple transactions, you have to use HBR to pay for it.
Ah, okay, so it's not optional.
No. Not at all. That's a really crucial point. Unlike, say, Ripple, where banks don't strictly need XRP, on Hedera, HBAR is essential. If you use the network, you need the token.
Gotcha.
Second, it's also used for network security. Users can stake their HBAR, basically locking it up to help maintain the network's integrity and earn rewards.
And this is where Hedera really seems to stand out, right? The performance claims are pretty wild.
They really are. The sources highlight some impressive numbers. Theoretically, it can handle over 10,000 transactions per second. TPS.
10,000 compared to 5 or 10 for older blockchain.
Exactly. Huge difference. Then there's the cost fees average around, wait for it, 0.00001 per transaction. Basically negligible.
Wow.
Transactions are final, completely irreversible in under 5 seconds. And maybe most relevant today, it's incredibly energy efficient, 0.001 kilowatt hours per transaction versus Bitcoin's massive 707.
That efficiency and speed, how does the Hashgraph tech make that happen?
It comes down to that gossip about gossip consensus mechanism. It's a different way of reaching agreement across the network. And the key thing it provides is something called asynchronous Byzantine fault tolerance, or ABFT.
Okay. Sounds technical. What does ABFT mean for users?
It means mathematical proof of finality. So when your transaction is confirmed, it's 100% final, done. No chance of being reversed later. It's not probabilistic like waiting for confirmations on Bitcoin.
Right, certainty.
Precisely. For an enterprise sending millions of transactions, that mathematical certainty is, it's non-negotiable. They need to know it's final.
Okay, that makes a lot of sense. The tech sounds solid for its purpose. But let's circle back to that core debate, the one from Reddit. Can HBAR's price really stay low if adoption explodes? It feels like it shouldn't, right? More use, more demand, higher price.
It does seem counterintuitive, yeah. And
right.
that's why there are strong arguments on both sides in our sources. The case for price increase, it boils down to basic supply and demand. Yes, the transaction fees are stable in USD, so if HBR goes up, you need fewer HBAR per transaction. But, and this is the key, there's a fixed total supply of 50 billion HDR. Forever.
Okay, fixed supply.
And right now, about 85% of that is already out there. So if mass adoption happens, meaning way more network usage...
Demand for HBR goes up.
Exactly. Demand goes up against a fixed supply. Economics 101 suggests the price should rise. Plus, think about those big companies. If they're doing thousands, maybe millions of transactions, they need to buy significant amounts of HBR, maybe even stocking up in advance. That's real buying pressure.
Right, the utility buying.
Yeah. And as the network gets busier, moving from, say, the current 1,500-ish TPS towards that 10,000 plus vision for things like ESG reporting or tokenizing assets, the network earns more revenue. Staking rewards for HBAR holders in dollar terms would likely increase.
Making HBR itself more attractive.
Potentially, yes. A higher yield could draw in more investors, pushing the price up. Some sources even ballpark network profitability, kicking in around 3,000 to 5,000 TPS.
Yeah.
And, let's be real, even though Hedera focuses on utility, market sentiment and good old speculation will play a role, just like with any crypto.
Okay, that's a solid case for price appreciation. But what about the other side? The voice is saying the price won't or can't really move much?
Yeah, this argument focuses purely on the transaction fee mechanism. They say the HBAR price is, quote, completely irrelevant to businesses because the fees always say 0.0001 USD. If HBAR doubles in price, you just use half as much HBAR.
So the cost for the company stays the same.
Exactly. Their point is, the company is insulated from HBAR's price volatility for their operational costs. Some even argue supply will just magically appear to meet demand, preventing a price rise, though that seems less convincing.
And wasn't there a claim it's just a useless token?
There was, yeah. But that seems strongly contradicted by the fact that it is required fuel for the network. Most sources dismiss that view.
So how do we square these? Predictable fees for companies, but potential appreciation for token holders.
That seems to be the tightrope Hedera is trying to walk. They've designed it so businesses can predict their costs in dollars, removing a major barrier to enterprise adoption, that crazy crypto volatility.
Right.
But by having a fixed total supply, the overall value of the network, and thus the token, can still appreciate if demand grows significantly. It's appreciation driven by network scale and scarcity, not by making individual transactions more expensive in HBAR terms. It's actually quite clever if they can pull it off.
Okay, that makes the model clear. Now, let's look at the market right now, July 2025. The signals seem, well, all over the place. One source mentioned a 41% weekly surge, another an 8% drop in 24 hours. What's going on?
Yeah, it's definitely a mixed bag in the short term. Classic crypto volatility, perhaps amplified here. Looking at the bearish signals first, one analysis from July 24th flagged HBAR as being in a potential profit-taking zone.
Meaning people who bought lower might be selling.
Possibly. It pointed to historical patterns, like a big 52% drawdown from its all-time high, and a similar crash back in March 2025. This specific analysis warned we could see another maybe 40% drop, putting HBAR down around 16 cents.
Ouch. Any technical signs?
Yeah, they mentioned a death cross forming on the 4-hour chart, which is usually seen as a bear signal, and the bull-bear power index turning negative, suggesting sellers were gaining control. Key support levels they highlighted were $0.23, 17.12, and that $1.19, and then that $1.16 mark.
Okay, so some definite warning signs there. But what about the bullish side? That 41% surge must have come from somewhere.
Absolutely. Another analysis from July 23rd painted a much brighter picture. It described a strong reversal, with the price pushing towards $28, and some analysts apparently targeting $50.
50 cents? That's a significant jump.
It is. Technically, they noted the relative strength index, the RSI, was very high, around 85, signaling strong buying momentum, although that often means it's overbought and might pull back soon. They also saw widening Bollinger Bands, suggesting more volatility, which could go either way, of course.
Right.
And then you have broader outlooks, like CoinCodex. As of the 24th, they had a neutral short-term sentiment, but predicted HBAR could climb about 34% to maybe narrow $0.32 by late August 2025. Longer term, they forecast a possible high near its old peak by end of 2025, maybe even hitting $1 sometime around September 2033. They also noted HBAR tends to move with the general crypto market.
So we're currently hovering around 0.235 cents, still quite a bit down from the peak back in 2021. Intense short-term chops, some bearish technicals, but also some optimistic targets and long-term forecasts. A really mixed picture.
That sums it up well, yeah.
Okay, let's shift gears slightly. Away from the charts and towards the smart money. We saw a source claiming over 100 large institutional clients, pension funds, wealth managers are specifically asking for HBAR when they dip into crypto. One exchange apparently holds more HBAR for clients than ETH. That sounds huge.
It sounds huge, definitely. It's a compelling claim. But like always, there are nuances. Some sources rightly ask, are these institutions buying HBAR directly now, or are they waiting for things like HBAR ETFs to get regulated exposure?
Good question.
What's undeniable, though, is Hedera's deliberate focus on traditional enterprise interest, not just chasing crypto VCs. That council membership, Google, IBM, Boeing, etc., plus partnerships like DLA Piper's Tuco platform, LSE.
Right.
It signals a different strategy.
Aiming for the established players.
Exactly. But there's a potential downside noted in the sources, too. While Hedera scores well in things like regulation friendliness and tech scalability, its developer ecosystem is apparently lagging behind some rivals. That's a risk factor, you know? You need devs building things on the platform for long-term adoption.
Right, adoption isn't just about big names signing up, it's about actual usage. So what are the usage numbers telling us? Are people actually building and transacting on Hedera?
They are, and the growth is impressive. Daily transactions are running at about 6.5 million. That's up a whopping 187% year over year.
Okay, that's significant growth.
Yeah, and monthly active addresses are around 246,000, which is up 63% year over year. So usage is growing substantially.
I sense a but coming.
Well, it connects back to the tokenomics. Remember that fixed supply of 50 billion? While about 85% is circulating now, the remaining chunk, roughly 17 billion HBAR, is scheduled to be released gradually over the next 15 plus years.
Ah, so new supply keeps hitting the market.
Correct. That creates ongoing selling pressure. To just absorb that new supply and support price appreciation, the network's adoption, the actual transaction volume and utility needs to grow really fast.
Yeah.
We're talking compound annual growth rates, probably north of 40%, maybe even 60% according to some analyses.
So HBR's price potential is really, really tied to massive, sustained enterprise adoption actually happening, not just hype.
Precisely. More so than perhaps many other cryptos where speculation plays a larger relative role. For HBAR, utility seems paramount for long-term value.
Got it. Beyond Hedera itself, what other sort of big picture forces could push HBR's price around in the coming years?
Several things come into play. Obviously, continued tech improvements from Hedera itself, better performance, new features, maybe more integration with DeFi or NFTs, though that's not their core focus.
Right.
Then there's the whole regulatory landscape. Clearer, more favorable crypto regulations globally could definitely boost institutional confidence and participation. Macroeconomics matter too, things like inflation, interest rates, general market sentiment. They affect investor appetite for risk assets like crypto.
And competition.
Oh, definitely. Hedera isn't alone. It competes with other layer ones like Ethereum, Solana, Cardano, but also with more private, enterprise-focused blockchains like Hyperledger or R3 Corda. It needs to keep proving its unique advantages.
Makes sense.
And finally, don't underestimate the power of the community. A strong, engaged community driving development, awareness, and adoption is crucial for any network's long-term health and ultimately the demand for its token.
Okay, we've covered a ton: the tech, the price debate, market signals, institutions, adoption realities, broader factors. So let's bring it back to the listener. For you trying to understand HBAR, maybe considering it, what's the takeaway? Is it a good investment?
Well, good depends entirely on your perspective and risk tolerance. HBR should probably be seen as a high-risk, potentially high-reward speculative asset.
High risk because?
Because of its volatility. Our sources show it's significantly more volatile than Bitcoin or Ethereum. It's had massive drawdowns, like 93% at one point. Its beta versus Bitcoin is high, like 1.57, meaning it tends to swing even harder than Bitcoin does.
Okay, so definitely not for the faint of heart.
No. While the historical returns have been amazing for early investors, one source mentioned plus 782% over 5 years. That came with huge swings. So for a conservative investor, HBAR is likely unsuitable as a core part of your portfolio.
But maybe for someone with a higher risk tolerance.
Yes, potentially. It could fit as a smaller satellite position if you strongly believe in the thesis of enterprise blockchain adoption and Hedera's unique approach. If you buy into their tech and governance model.
And for active traders.
There might be opportunities, yeah. Things like playing mean reversion after big swings, trading its correlation to the broader market, maybe trying to time volatility around major enterprise partnership announcements. But given the volatility and the ongoing token releases,
risk management is key.
Absolutely paramount. Careful position sizing, stop losses, understanding the token release schedule, it's crucial.
Right. So to wrap up, we've really dug into Hedera Hashgraph. Unique tech, that central debate about price versus adoption, the confusing short-term signals versus potential long-term institutional pull. It's definitely complex.
It really is. Hopefully, though, you now have a much clearer grasp of all the different forces shaping HBR's story.
Yeah, I think so.
Ultimately, HBR sits in this fascinating intersection between public crypto and private enterprise needs. Its success really seems to depend on proving its tech, actually landing that widespread enterprise usage, and navigating its own token supply dynamics very carefully.
Okay, makes sense. And before we go, here's maybe a final thought to leave you with. Considering Hedera's design stability for enterprise, that high-security ABFT, could HBR's real destiny be less about those wild crypto price surges we see elsewhere, and more about just quietly becoming essential, like the invisible plumbing under the hood of the global economy, powering countless everyday business transactions without anyone even noticing the token itself? Is its value in being ubiquitous rather than explosive?
That's an interesting way to frame it, the invisible infrastructure play.
Something to think about as you continue exploring this space. Thanks for joining us on The Deep Dive.